Now with 100% less mute. Hope everyone's doing well. Let's see here. See what we got going on tonight. All right. Got some friends and DGens rolling through the chat. Hope everyone's having a good time. Hopefully that somewhat worked. Hey, Brown. Good to see you, man. My brother from another mother's uncles, twice removed, cousin something or other. My man, Boogie. Good to see you. And the Ascending Man himself. Hey, Nate, it's been fun watching some of the chats on DGen Roundtable and seeing everyone level up their game on some of those other sidebars. So pretty cool stuff going on over there. All right. So I had a few things popping up in my feed that I wanted to talk about, namely some stuff going on with the yen and over in Japan. So this has just been all over my feed. I don't know if it's the algorithm, if it's other stuff we got going on. I was sidebarring with a few different Telegram groups today, trying to get to the bottom of some stuff. And let me just start rocking out some screen shares, just kind of talking my way through some of this stuff. So basically, what I'm seeing on a number of Twitter feeds is just a number of conversations regarding the yen and what we got going on over there. And so I was like, all right, I was kind of curious. So I said, let me pull up a chart and just kind of eyeball some stuff and see what we got going on. So to that end, let me blow this one up. Cool. All right. So currently, this is a ratio of the US dollar to the Japanese yen. And we'll get to how this all ties back into crypto here very shortly. So we can see we're floating at around a ratio of 158. So dollar gaining a lot of strength relative to the yen, or the yen losing a lot of strength to the dollar. I was, okay, real interesting. I know that the Japanese country tends to be fairly in debt relative to its GDP. So I said, okay, what's kind of the ratio on that looking like these days? And this is as of March 2023, but they were at 263% debt to GDP and the highest of any developed nation. Interestingly enough, less than half, let's say a significant amount though, is still owned by the Bank of Japan. All right, that sounds kind of crazy to me. I know we talk about being 100+% on that. I don't know when death spirals tend to kick in for debt to GDP. But if we're looking at the strength of the dollar to the really the lack of strength versus the yen, we haven't seen this high of a level since roughly May of 1990. And then going further back, we're talking December of 86. So I guess if anyone's looking to make a trip to Japan, now might not be a bad time. Might be, a lot of bang for your buck comparatively. All right. So what do we got going on that front? I see a lot of chatter about this is potentially ripping through different barriers. Potentially the yen's in free fall. They don't have a whole lot of great options. And what are their options potentially? Maybe what? They can't really work with normalized rates with the Fed since they need to maintain low rates over there. As the USD strengthens, they're going to lose some strength on the yen, and that ratio, it looks like it's about to skyrocket here, right? Like what resistance is there? And this is a monthly chart, to be fair. But what resistance is there? Like potentially what? It's going to skyrocket up to, I don't know. Let's see, next area potentially resistance, 180, 200, 222, and then, oh shit. So what else they got going on over there? They hold a bunch of treasuries, and it turns out they're actually, as far as countries go, they are the dominant holder of US Treasuries outside the US, effectively. It's them and China. And kudos to Battle Hardened Sniper for swapping some messages with me this morning on a couple different topics, this being one of them. We were talking about what that looks like. And over on the FinWatch side of things, he tossed me a link to FinWatch on some stuff. Basically, it's China's been dropping over time, and we'll talk about that here too in a second, dropping their holding of US Treasuries. And so I think the real X factor here is going to be the rate of exit on US Treasuries, unless who knows what. We're going to several countries simultaneously fire up the money printers and run hot in this stuff. I don't know. I don't see a whole lot of great options over here. So looks like the walls are starting to close in. Japan's kind of painted in the corner. Let me come back around to some of the other things I got prepped for today's imagery over here. So there's the Japanese yen on that front. We just established they got a high amount of debt to GDP on that front. So in my research, this article popped up and said, okay, why a historical JPY or Japanese yen currency crisis at the doorstep of Japan? This was, what, a month ago that some folks were really highlighting this once again. And effectively, they're losing too much power relative to the yen too quickly. And you can just see since 2010, like many other countries, to be fair, right, they have doubled their amount of money supply. It's just looking insane. And then you can see over time, the USD reserves at the same time. And then if they're converting the yen to the US dollar, their foreign currency reserves standing at, what's that? I'm terrible at looking at huge numbers like that. What's that? 1.25 trillion, give or take, on that. And when we start looking at these huge numbers, they have so much by way of treasury holdings. What are their options to pop up and prop up their currency? What are they going to do? Potentially start selling out of treasuries at an increased clip? That starts to look like desperation. And then what? Other countries start doing the same? I don't know. Foreign currency stuff when it comes to treasuries and debt holdings is not my forte. So if any viewers out there know better, I'd love to have you on the show. Happy to talk about it. Happy to learn more as we go on this front. So speculation on my side, it's going to come down to the rate of exit. If a bunch of countries start dumping treasuries at the same time, we're going to have some level of knock-on effects that could potentially start to get really unpleasant on that front. And I said, okay, relative to some of these things, let me ask one of the best teachers that I can potentially think of. And I said, hey, dear co-pilot, let me just ask, what do we got going on this front? What happens if we start seeing a bunch of countries, particularly China and Japan, chucking a bunch of stuff in by way of treasuries, just exiting out? And what I did here was said, just bear with me one second here. I want to make sure I'm re-asking. What happens if Japan and China sell or eliminate their US treasuries in order to prop up their currencies? And so shout out to RH Max, who's been really a good voice for using different AI tools and machine learning tools to streamline some of your workflows. And like, it's definitely helped me out. I use Midjourney already for a number of different thumbnails on that front. And I've been increasingly use it just as far as some show notes and show research and the like. Nate's looking for some land for sale in Japan. Hey, I wouldn't mind having a house in Japan just for shits and giggles. Hey, Z, what's going on, brother? And so, anyway, when I asked Copilot this stuff, this is what it started, which is really powered by ChatGPT in the background. If they sell off a substantial portion of their treasuries, it leads into a decrease for bonds, which would mean treasury prices would decrease, resulting in higher yields. Higher yields, in turn, impact borrowing costs for U.S. government and other borrowers. So in this particular case, they might sell them to prop up the Chinese yuan as well as the yen. It would potentially put downward pressure on the US dollars. We could see different trade barriers, economic relations and the like being disrupted. I'm sure Yellen was calling them overnight, or in the last few nights, or has been on routine conversations with him on this topic. And if they are selling some things off, then it would be multifaceted, affecting interest rates, currency values, and global financial stability. So I started poking around a little bit more. And then I said, okay, well, who else holds treasuries? And it turns out Tether, USDT Tether, holds about 60 to 70 billion worth of treasuries. They got a market cap of what, 110, so 60 to 70 billion on treasuries held. And I think their market cap's floating around 110 to 120 billion on that front right now. So they have a substantial portion of their backing, on paper at least, powered by US Treasuries. Now, I'm sure they're very much over collateralized with other assets. Again, looking into the crystal ball, speculating, if the rate of the dump on US Treasuries is nasty and significant, does that start to have knock-on impacts into something like Tether? I would think potentially yes. And so what would that mean for different Tether pairings if USDT is starting to face all this downward pressure? I think stuff would get really interesting in seeing different aspects of liquidity on that front. So, okay, we're talking a little bit about treasuries and potential knock-on impacts. What else we got going on? Well, some of the other news that popped up this week was US regulators seizing Republic First, and they sold it to Fulton Bank. So this is another bank seizure. I know we saw several last year. They sold, regulators seized Republic First and then sold it and turned it over to Fulton Bank. Okay, interesting. Is that a portent of things to come? They said they did this ostensibly to protect depositors. Certainly, I don't want to see banks fail. That usually means we got some other nasty stuff working its way through the system. So we're going to check that on as a data point as well. We've got a failing yen. We've got a failing bank on that front. We've talked potentially about some level of knock-on currency impacts on that as well. The other one that popped up on my news feed too, and I'm starting to piece together aspects of some sort of macro puzzle here, is the consolidation in the Russell 3000, which, to be fair, I do not generally follow, but looking at the consolidation of the values into a decreasing pool over time since 2021. And in this particular case, Michael Gad, I hope I'm saying his name right, lead lag report over there, really great financial economic research on macro, is that 70% of the stocks in the Russell 3000 are below their 2021 highs. Meaning what? In my mind, this has to do with rates and debt, and people are increasingly moving capital into a smaller number of what they will feel will be a surefire bet. So in context, this is my personal speculation. We could see some sort of dip here. I think many of us are expecting a certain level of macro dip as we look at conflict in the Ukraine, conflict in the Middle East. Who knows what's going to happen in China and Taiwan. We see banks collapsing. There's potential chatter here about Japan selling out of US Treasuries, which maybe starts some sort of downward spiral on US Treasuries. Again, I'm speculating it's going to come down a rate. There's a difference between, hey, Japan and China and other countries have a very long-term phased exit versus, oh shit, it's a fire sale, send it. I am thinking, this is based on what I'm seeing right now, let me read a few tea leaves on that front, is we'll see a little bit of, or maybe not little, but some level of downward pressure. And at some point in time, they're going to fire up money printers or move to quantitative easing. And like maybe it'll be that plus some level of rate cut. And you will see more liquidity injected back into the system. And so for those in the crypto space, those who are in a position to acquire, hang on to, and hold assets, you need to set up your fishing nets or your trawling nets. That liquidity comes running in. You want to be in a position where you can start catching as many percentage points of that as you possibly can to continue to accrue, hold, preserve, and store value or make mad gains. And Boogie's got a comment here. I remember back when I used to live in Japan, everything was so expensive. If I tried buying with US dollars back in 2003, well, let me hop back to that chart, brother, and see what we got going on back here. So circa 2003 on that front. Yeah, you would see that compared to today, your purchasing power would have been significantly reduced. You basically gained 50% on your purchasing power, according to that chart, plus whatever, I guess, offsets potentially are happening in the Japanese economy on that front. So food for thought, if anyone's looking for a trip to Japan, might not be a bad idea on that front. And let me pivot over to this. Looking at prices there, the yen amounts are almost the same as the dollar amounts here. So Nate, are you saying like on paper, like a $500,000 house here versus 500,000 yen house? And I don't know what the scaling is necessarily on that. That's how I'm interpreting that comment. Let me know. I'll keep my eyes peeled on chat here in a minute. All right. So what I did want to quickly segue over to, just as kind of a background, is many people know in a prior lifetime, I played music for a while, still do. These days, my income is not dependent on it. So I got a second cam set up to try to assist with some level of music tutelage and tinkering around with some stuff. So let me grab my guitar. I am once again playing my number one. This is a Charvel Model 1 on that. It is the dual humbucker model. Love this thing. It's easily one of the best guitars I've ever played, especially when I think it's an off-the-shelf guitar and not terribly customized. So in a little bit of a nod to some of the Far East elements, you can kind of riff and get these types of sounds on guitar. And what that is I'm playing, in music theory speak, I am looking at a C major scale. I am playing the 7th mode on that, so thinking B Locrian, and I'm playing a minor 11 flat 5, which kind of gives you this sound on that. And then I'll weave that in and out of some rock type playing. And if what I said sounds like absolute Greek to you, feel free to hit me up. I do provide lessons, willing to work with some folks. Bonus points if you pay in crypto. I'll cut you a discount if you pay in crypto to teach you some of those different ideas and concepts on that front. All right, so hopping back over to the chat. Let's see what we got going on over there. Dollar amounts here and there are the same. Could very well be. I don't know how the real estate aspect of Japan works as far as holding value as an asset. I'm thinking, though, if maybe somebody wants to, grab a Japanese vacation, might not be a bad idea in the grand scheme of things. All right. Hop back over here, take a look at a few other things. And continuing the story on the Japanese yen, they're saying, relatively speaking, that the yen's at 34-year lows. So Ministry of Finance is salivating. If you follow my Twitter, I tend to rebroadcast a lot of these things because I know we got folks like the DGen Roundtable who will cover a lot of the macro and psychology elements. They have folks like Jay, Z, and other individuals who like to chart out. Obviously, you've seen myself on Boogie's channel and Boogie on my channel. Boogie likes to handle a lot of the TA. I handle some of the FA and on-chain stuff. I don't necessarily follow a whole lot of international currency-related elements and the intertwining of international debt. I'm starting to become more well-versed in it. I think for what is looming on the horizon, we're all going to need to be a little bit more well-versed in it in the grand scheme of things, just to see the corresponding knock-on impacts of that. So let's see here. So coming back around to this, let me overlay something here, and let's take a look at Bitcoin over that same span of time. Interesting. So there's a little bit of an underlying pattern there we can start to tease out a little bit. We're sitting at around 63,282 bucks today. So the question I would have is, to what extent is this correlated to the US dollar money supply in the grand scheme of things, as well as the DXY? So let me hop over to DXY on this one. And DXY sitting at around 106. We peaked out in, looks like 22. And again, I'm on a monthly chart on this one at around, what was that, 110? And we haven't seen a DXY that strong since 2002, give or take, over there. So food for thought on this one. Let me drop out of a couple of these charts. And so I am wondering, again, is the yen a portent of things to come? So I wanted to hop on, throw down a quick stream, do a little bit of a musical knowledge drop on that. So that is, again, minor 11 flat 5. And I'll be explaining in future streams how I weave that in and out of some of my playing as well, why it works in so many different contexts as far as the background harmony and theory on some of that playing. And let's see what we got going on here. Anything else late breaking in the crypto news cycle? Not at this moment in time. One of the things I actually did want to mention here as I was skimming through, there is potentially an argument for what is called exponential decay in the Bitcoin price that I am eyeballing on the side. It has to do with basically our gains cyclically have been muted on this. Long story short here is if that pattern holds up, I need to recheck some math on it. I'm not the person to have uncovered this argument or presented this argument originally, but it would look like on paper we top out at 73,000, which we've kind of already done. So I don't think that holds true because of the pending and looming and in progress wealth transfer and asset transfers plus ETFs. But on paper, if you look at the decay of Bitcoin gains over time using this algorithm, it points towards 73,000. But we'll cover that one more in a future stream. That's all I got for today. I wanted to hop on, talk about treasuries, potential knock-on impacts, watch for treasuries, potential fire sale, how it might impact something like in turn, if treasuries start dumping, watch Tether is what I'm thinking on that one, because that's paired to so many different things, and we will see how that shapes up. That's all I got for today, guys. Appreciate everyone tuning in. Hope everyone has a great weekend. Thanks.